Thanks for coming, Shawn.
Thanks for having me.
This is the Investor Frame podcast. So we started this up. Paul actually did it a couple months ago, and thanks for coming on. And I just kind of wanted to ask you about, what got you into real estate investing. And it's been a long time coming for me and you to sit down and start talking about some deals.
Man. Yeah, I know. We usually talk over vodka sodas and get deals stolen from us from New Western. So good to connect. But I got into real estate 5-6 years ago, and really just wanted to not work.
Right.
And that was it.
Right.
Like everybody says, I mean, they want passive income, all that. I've kind of had this goal since I was 20 something to retire at 30. So I've been working on that and just got my real estate license 5 years ago to kind of learn what it looked like. Bought a rental out of state without ever seeing it with like the first 20,000 I ever had. And
by yourself, like just solo?
Just solo. Yeah.
Damn, bro. That's a leap.
That deal did not go well. Yeah. As you can imagine, I still never saw it to this day. I already sold it. I owned it, sold it, never saw it. Terrible property manager, learned a ton. And then I've just been kind of building on that, building off investors like yourself and other people that we work with, and just kind of taking tidbits here and there, figuring out what works. And there's a million ways to make $1 million in real estate. So it's kind of just figuring out what's a good fit for you. And I think my fit is value add multifamily for sure, value add single family. And that's kind of my niche, and definitely not reinventing the wheel on any of that. No. But I like to think I'd do it okay.
Yeah, you definitely do. And you just threw a lot of stuff in there. So, okay. So
a lot of stuff.
Did you start out in Denver then? So you bought your first, you started real estate in Denver, right? Like you got your license?
I did, yeah. So I've been out in Denver for about a decade now. So I got my license. I was working in pharmaceuticals. Yep. My degree, and knew off the bat that was not it. I graduated college and then I was a janitor at this lab. And they were like, yeah, you'll be like this, lab assistant, and you'll work side by side with like people, in the lab. And I was like, well, that sounds pretty good. And then the side by side allegedly, or apparently, I was just a janitor.
Yeah.
I was side by side. So
solving the equations.
Exactly. Yeah. So I was like, and I was only working a couple days a week because they were 12-hour shifts. And so got my license then and started just doing it on the side, and sold a few houses to people I worked with, and then was just always looking to.
So you started with the license. You're like, I'm just gonna get my license, and
definitely,
because that's where I am like debating, like, should I get my license? And I've kind of been going back and forth in the last couple months now that everything's kind of changed.
Yeah, I think with your network, it's unnecessary. Like I didn't know anybody. I didn't know any investors. I wasn't a part of any Facebook groups. I was just like, I'm just figure this out. Right. First step, get my license to even learn like how to
buy
a house. And learn about it. I didn't really learn much, obviously, from school. I think there's 40 some odd thousand feet in an acre, and that's about it.
You learn more by buying that house, and
I think so. Yeah, I kind of just dove right in, and it was pretty addicting from that first jump. I think the first rent check, I bought my ski pass out here, and I was like, well, this is pretty cool.
Yeah.
And then never really cash flowed again. Mm-hmm. But that first check was pretty good.
You were like, I'm in, baby.
Yeah, exactly. So a lot of lessons learned, but I think the license for me was just a way to dive in and just start learning about it.
Yeah. And how I met you was, so I was just wholesaling, right? Like that's how I got into it, was wholesale, like just investor. And I kind of get a little irked when people say like, oh, you're one of those wholesalers. Now I'm like, whoa. Like, don't you call me a wholesaler?
Right,
I'm a lot more than that.
Definitely.
But no. Yeah. But I found you because you were a buyer, right? Like, because you buy these deals from wholesalers and you have buyers. Like you have the whole, all I would have to do is like, if I had a deal or working a deal that's off market, I would literally just call you, and you had a number for me, and whether you were buying it or somebody else was buying it, we could figure out what our assignment was from there.
Yeah, it was a beautiful setup.
It was crazy, man. Like I was like, Marissa would be like, "Oh, you must be on the phone with Shawn again." Like it was an everyday thing.
It was, man. We were cooking for a little bit.
And then what? Denver market's starting to go down a little bit, right?
Yeah. It's
phone stops ringing.
Yeah, super soft out there. So I think the novations you're doing, the creative finance that you and I are both doing.
Yeah,
I think that's the key to succeed here. As it gets soft, and so many different opportunities out there right now, as opposed to 6 months ago. And cash buyers are less, but creative finance buyers are.
Right.
They're all over.
And that's really what I wanted to talk about too. Okay. So now that we are in this like pivot mode, I know me and you obviously have talked about it, but like, you built a team too, right? So like you became an agent and then
Right.
you built a whole like is it brokerage or just a team? Like
Yeah, brokerage.
both,
Yeah, we've got
all of it.
yeah brokerage. Obviously, a ton of property management as well. But there's 4 brokers under us, or 4 agents
Right.
under me that I manage and supervise, and they're
Right.
all investor focused, fix and flips, creative stuff, and that's all we do and all I wanted to do, which is kind of why we started it up and
Yeah.
built a team and just kind of teach our agents how to create these deals and put these things together. And
Right.
obviously it helps clients, helps us, and really just puts more deals in front of everybody too.
Yeah.
When we've got multiple people pounding the pavement, similar to your team,
Mm-hmm.
there's always some deal flow coming in, which was
Yeah.
the ideal setup there.
When did you start your team? So you were an agent by yourself for what, a couple years?
Yeah, I think 3 years, and then started 18, 20 months ago
Okay.
with the team, and then built up all that property management junk and all the stuff that I'm getting out of, luckily, as of the
Right.
new year.
Right.
New company, new me.
Nice.
But yeah.
So it is a
built
new
agent-
company.
It'll be a new company January, so I'm leaving the current company. I'm not
Yeah.
going to give them a shout out because
Yeah.
fuck that company.
Yeah. Taking your
Edit
name.
that out.
Yeah.
But yeah, so I'm taking my talents to South Beach, as LeBron says, and
Yeah.
I'm just branching out, do the same
Do you-
thing with investors and all
New
of that.
name?
But new name, yep, just me. Probably build another team up.
Do we
and
know the new name yet?
I don't know the new
Do
name,
you-
or I'd give it a shout out.
Okay,
right
well,
now.
because I just had Chad here, and I'm thinking about getting my license. Now I'm like, do I go with the new team?
Yeah,
Like we
man.
get Jordan and Pippen back together?
Exactly.
Or what?
Yeah. I mean, the barrier of entry's low.
Yeah,
You get a little bit of liquor in me, you're already on the team.
Yeah,
And,
hell yeah. I
and
think
we're
I
good
can
to go.
skip the interview process, right?
I would say so. Yeah, I
Dude,
think
that's crazy.
we just need to do a little peyote together in the desert, come up with
Yeah.
that name, and
Yeah.
we should be good to go.
Dude, sweet. Well, that's
Yeah.
good, man.
Yeah, it should be good.
So new year, so January 1st then, or
Yeah, sometime in January, I got to
Okay.
figure out somebody. We've got one of our investors is getting his managing broker's license, so I can't leave until he kind of assumes that position,
right.
just for the property management side. So
nice.
they're taking all that, and good riddance.
Okay,
They
so
can have it.
So with the new team then, that you're going to be spearheading, like what's going to be your focus? I know you had focus on property management, right? So that's out
Yeah.
the door. You were saying like,
Yeah, that's
just
out
too
the
much
door.
work or what? Like,
Yeah, too much work, some partner issues. Overall, it's just not highest and best use of time. I
Right.
mean, you and I are built to be looking at deals, running deals,
mhm.
doing novations. I want to
Yeah.
learn from you on that. Doing seller finance and sub two and all of that stuff is where I want to spend my time. And
Yeah.
the end goal's always been to build my own portfolio, and whether that comes from commissions or wholesale fees from helping other people, or whether it's just me raising private capital and buying every deal I see.
Yeah.
I just want that to be my focus there, because that's where I have the most fun and
Right.
get that little flutter of the
Yeah.
heartght when a good
Yeah.
deal hits the desk.
It's like an
and
addiction, right?
It's
like,
fun, man. It's a lot of fun. Yeah.
So acquire properties long term. I mean, that's the goal
Yeah.
for you.
Yeah.
Like, yeah.
Definitely.
Yeah, well, that's kind of where we're pivoting that seller finance, man. I think that we really hit the ground running, right? Like, so the last couple months, like we've been talking about this, and now that the market has shifted, I mean, we were talking the other day, like I don't have one fix and flipper buying right now. Like
Right.
I do have a corporation, like that's just like, a couple of those buyers, like home builders or whatever.
Right.
But like individuals in Denver, these guys that we would just pick up on the phone, like, hey, you want a deal? Want another one? Like,
Right.
those guys stopped. We've stopped. I mean,
Yeah.
we're not even going to do even a novation is tough for us right now. Like we're trying to like see what's going to happen on this back end. So
Yeah, definitely.
So I mean, like what we're focusing on specifically is how to talk to these sellers on these seller finance deals.
Yeah.
You just had one locked up the other day, right?
Yeah.
And just getting repetition on that, and then subject to, because they are very creative. They are like very complicated. And that's the number one reason why sellers tell me no, is just because like I tend to over explain it. I'm talking like balloon payments. I'm talking like all this stuff that they don't understand. And they're just like, nah, I don't want to do it. Like,
yeah, right.
So it's not as easy as a cash offer, but that's our job, is to figure out how to explain it in simple terms.
Yeah, definitely. It's certainly not for everybody, but yeah, giving them the price they need in this market, plus they make so much more money, than they would from a cash offer. Plus, you're deferring kind of your tax burden that you get if you just sold it. There's a ton of benefits there. So yeah, learning that pitch is huge, and locking up a couple over the last couple months has been great. One of them I'm holding on to right now, and that's over in Berkeley and Denver. Great little Airbnb.
You're keeping it?
I'm keeping that. That's a 10-year note, 4% interest only. It's like a 3-bed, 3-bath. Right off.
Did you have to pay a down payment?
Street. There's 10% down.
Okay.
So it's not.
You got
ideal.
That cash.
Yeah. And I know some people that help me out on these types of deals.
Yeah.
Especially when I'm low, because I have a house buying problem.
Right.
So private money is key on that one.
Yeah.
But yeah, keeping that right off Tennyson Street, right by all those bars and stuff. So
bro.
If all else fails, my life goes to shit, I'll just move in and become that drunk that I've always wanted to be. So that's the key.
Well, you're in the real estate game, so you're halfway there, right?
Exactly. Yeah, absolutely. Yeah, absolutely. Sobered up for this conversation here.
Well, that's good, man. I had no idea that you kept a seller finance deal.
Yeah, I love that deal, man. That was $575, 10-year note, 4% interest only. Put about 30,000, and it's just about done. Yeah, and probably worth about $750 right now.
Yeah,
so still some equity and still that sweet note too. So all kind of goes back to
10 years, man.
Things that we always do. I mean, you can always give a little on price with seller finance, but to get that equity baked in, plus the cash flow, plus the long note for 10 years, it was a win-win.
You could have probably even gone higher on the purchase price, to be honest.
I could have, yeah. I probably could have gone lower too. I
might
have given him a little too much there because it did need some work. But
it's all right. This is the first ones though, right? Like we iron out those couple, and that's why I love you, because like you do have that like numbers. I don't know. You're just so good at like reading these deals and underwriting them. I'm not as good as that at that, and that's why I call you, and that's why we work well together. But yeah, having you on the phone with a seller is like just so much value, right? Like, because you can talk, like, especially on multifamilies, like stuff I don't know about. You're like, you've been doing it for 30 years type stuff. Like,
right.
I mean, you're spitting out these numbers and I'm already lost. I don't know how people follow, but
right.
Like that deal in Colorado Springs we were doing, like that development, that 40 unit, like that is not my playground. You took it like a champ. I mean, that's crazy. But
those are great deals, man.
Yeah, I mean, I think it's a good path, and then what we like obviously have focused on too is the content creation, like just to get our free marketing. So like that's where we're focusing, because you know us better than like a lot of other investors here. Like we were spending a lot of money on mailers. When I first came in, we were doing cold call, cold texting, mailing, and like that adds up, man. Like, and when these deals, these wholesale deals aren't hitting like they were, it's hard to keep those marketing channels up. So that's kind of why we're pivoting and like just trying to give as much information to anybody trying to get into this game as possible. And hence the podcast and like all of the content that Paul and I have been just producing is just to like teach people what you've taught me, what I've taught you, and just give it away for free, because then they can in turn bring us deals, and it's a give and take kind of thing. So
I left definitely all the mailers and the expensive stuff to you guys. I was just there for the end, for the glorious part. But
you come across the finish line.
Exactly. Yeah, you guys, I know we're spending a ton, and
got
still a lot of deals done, but it was a grind.
But too, I mean, starting your own like team, like you're gonna know like how you're gonna go about doing that, right? Like you're gonna have someone hitting the phones, and but you're not gonna be paying, like, not to make that a huge expense,
definitely. I mean, the key is commission only realtors.
There you go.
The hungry ones.
There you go. Right here, baby.
Get them dialing, and there you go. Free cold caller.
Yeah, man. Well, see, that's good, because then you're already getting ahead of the curve that way too. Because I personally think it's going to get a little bit harder too. Like I don't know like what your market predictions are, but like I mean, it's not going to get any better. It's not going to go back to what it was when our phones were blowing up at 8-9 a.m. every day.
Right. Yeah, I think it's going to get a lot worse. I think what I am planning on doing, and what I recommend to every person, whether they're new or have a couple houses under their belt, is get that HELOC in place. Get liquid for deals to come down the pipeline, because we're in the softest market since 2008. I was 15 years old in 2008, so it's not like I accomplished very much during that downturn.
You got good at Call of Duty,
and
right?
Now, I mean, we're seeing the softest Denver market in 10 years, and so if even if it's just your primary and you experience 10-20% appreciation over the last couple of years, I would get that HELOC in place as soon as possible because your comps are getting worse and worse.
There you go.
So you want that appraisal in if you can before the end of the year, before it just keeps going down.
Yeah.
And just keep that capital there. You don't pay on a HELOC unless you're using it. Typically interest only for 10 years. And it puts you in a position for, some serious wealth in the next couple of years. I mean, it only took me 2.5 years to get 10 doors and probably over $1 million of equity, and I'm kind of getting ready to keep building that and then trade up on a 1031.
Right.
But it happened super quick, and it was really through HELOCs and that leverage and just using that smart and only going value add. And so
just buying more with that HELOC, right?
Like, exactly. Yeah. The first deal that I did when I moved back to Denver, I was in Seattle for a year, and then I moved back. I bought a house in Westwood of Denver, which is a little bit of a rough neighborhood, but house hacked it for a little bit, put a bunch of money in, and then got a HELOC. I think 6 months after I owned it. It was only $65K on the HELOC, but that $65K made me probably over 200 on flips. Right. That 200 turned into probably $400K of equity in rentals that are now ready to 1031 and keep stepping up. So it's a huge tool in real estate. We all know the benefits of depreciation and leverage and all of that, but taking it one step further to get these HELOCs and do it in the right way with value add and bake in that equity and know your numbers. It's just the easiest way to build crazy wealth in 1 to 2 years, especially with it getting soft. I think we all need to be ready to buy a bunch because we may not see an opportunity like this for another 10 years. And so that's where I see the market going. What I'm preparing to do is just get the funds in place, stay liquid enough, and keep waiting for these deals and bigger multifamily and maybe even do single family just as stepping stones because we know it so well. Right. Get some real cheap single family, just use it as a tool for 2 years and cash flow a little bit, and then trade them all up as one and really take down some larger multifamily there. And I think that's the key here over the next year because it's certainly getting worse and rates are going up again, and being prepared for all of that. I mean, we could literally throw a rock and buy a house today. Yeah. If it's on market, you can walk right into it and buy it. Like that has never happened in so long in Denver. So it's interesting, but staying liquid. I don't even remember what the question was, but I don't either.
Well, that's what it's all about. But you just shared so much stuff that that's exactly the point of this, right? You just gave the most real advice that you could give to someone coming into it or that's already into it somewhat like me. I would have never known to do that. And I've been in wholesale. My whole goal before this market was just to generate cash, get as much cash as possible. Right. Now it's okay, what do I do with that cash? When is a smart time to buy? What loans do I use? How do I take advantage of it?
Yeah. And that's the tricky part now about buying and holding. I mean, especially if you're taking down hard money, which is the most common way with that real value add. That refi is the rough part. So making sure your cash flowing, obviously, you're going to fix it up. So repairs are going to be negligible if you're doing it right. Knowing all that stuff and kind of lining up your financing even before you buy it is key on the exit strategy to make sure you're protected there. Yeah. But the HELOC or, the cash out is, I think, the greatest tool, especially for people who have owned for 1 or 2 years. Even if it's just one house, you can tap 100% of that through a HELOC, which could be $200,000-$300,000
if you use it right.
If you use it right, and that can turn exponential very quickly. And I think that's where we're heading. What I'm prepared for.
I think so too. And and it's exciting to hear you talk about multifamily. You are very knowledgeable in that field, and that's obviously the end goal. Maybe not even the end goal, but that's going to move the needle closer, way quicker as those multifamily. We could do 10 single family deals with a lot of headache, a lot of stress, or we could just do one multifamily. And that's where getting good at seller finance and sub 2 is beneficial because it's more prevalent in that community, right?
Definitely.
Because the tax situation, no one's going to want to pay Uncle Sam when they have this multi-million-dollar multi-unit.
Yeah, right.
I mean, they could use a strategy like seller finance where they could just completely, explode their built, their capital gains.
Yeah, definitely. I think the only thing you're up against there is the 1031, because every investor who makes it into multifamily is most likely 1031 to get there and is going to 1031 out of there.
But why? Like most of the times they want to sell is just because like they don't want to deal with it anymore, though, right? Like, and they don't.
Yeah.
I mean, so like a 1031, they're in the same situation. They just have another property management company, another property.
It is true. Yeah, I think it definitely a certain set of ownership where they're, typically I would say older age,
right?
Getting
next
tired.
phasers, right? That are like done with.
They've built it up. They still want the monthly income, but typically you're, the 30 to 45-year-olds who are building it up are more interested in 1031ing, and most likely not. They might be sick of a certain property, but they're not sick of
properties in general.
The trajectory that they're on, and so I think that older group, and even pulling lists of people who've owned the same multifamily for 20, 30 years is a great place to start to find some of these, potential seller finance deals. They're most likely paid off. Those people might be getting towards that point where they don't want it anymore. Right. So, those lists are places that I look for, some creative multifamily deals for sure.
Well, that's good too, is like where are you pulling these lists? Like, I mean, obviously the marketing we've already talked about, we're not going to spend too much money attacking those lists. That'd be just like you on the phones or someone below, like one of your agents on the phone.
Yeah.
So those lists are good. And you just pull those off the MLS or what?
Yes. I mean, I typically send them to you.
So I
don't know what happens. It's like, it's Christmas morning, basically. I just received this list of phone numbers. But yeah, I mean, title company, pulls a list of owners, skip trace from there with whatever you use. And then I throw you a couple bucks. And that's it.
Yeah. I mean, that's the value I can bring, right? Because I don't know about the multifamily. Like, if I can get on the phones and like make that part, like finding the deal, like that's what I can bring to the table, right?
Yeah,
like,
definitely. And so you and I know this too, but maybe some of our people who are going to be watching this might not. I mean, you can pull a very, very specific list from any title company you want. Again, have they owned the same property 20 or 30 years? You can sort by number of units, zip codes. You can really drill down, you might even be able to do like mortgage loan amount, under a certain thing, or there's a ton of different criteria too. So every title company can do it. You and I, have pulled lists for a long time, but there's endless data. So I think being as specific as possible with what you want, what's going to work for you investment wise, and then figuring out, who might be the most motivated on that list. And I think that, the longer ownership type and the older group is more open to becoming the bank. They're going to understand making so much more on seller finance versus the younger guy who's in that 1031 cycle.
Right. Just wants to build up.
Trading up. Yeah.
Right. But, and that's the thing too. Like, I don't think you can pull a wrong list. Like, cause Paul and I, like at first we would sit down and like take an hour and just like categorizing, like, okay, do we want to attack like 10% equity? Do we want to attack 100%? Like we spent all this time on building the list. And really what comes down to it, did you call the list? Like that's where it's at. Like a lot of people getting into it, like, okay, I got the list, I did all the work, and then getting on the phones is the hard part. And that's like, you just got to get past that by doing it, really. Like just making those calls. I didn't know how to even pitch seller finance until a couple months ago, even. Like even still, like I have a trouble like talking about it, but I didn't get good at wholesale until we just started doing it. I started calling these people and then deals started just rolling and rolling.
Absolutely.
I see the same thing with seller finance. I mean, you just really started going into it heavy and you already bought one, like you own one, you have one under contract, like it's just going to keep rolling and rolling. They're going to get better and better.
Yeah, definitely.
We're shooting for that zero down, zero
interest. If I can get it negative down, maybe like some 08 type reverse mortgage type thing. They pay me at closing or something like that.
Yeah. But, and so that's another thing too with sub 2. Now we can start seeing maybe people that are upside down in equity, right? Like, definitely. And that's where we really can help them.
Yeah, it's another great list to pull. Yeah. Someone who just bought or recently bought at the peak, 6 months ago. Yeah. I mean, those are great people too.
Because like in order to sell, then they would have to bring their own money to the table to pay realtor commissions.
Exactly.
Or we can just buy it on sub 2, maybe throw $5,000-$10,000 in their pocket and they're out of the situation.
Yeah, exactly. So that's a great strategy. I think the cash flow on those may be a little tough, but I mean, they should have got a pretty decent interest rate.
Yeah, because it was 6 months ago, huh? I mean, maybe like 5%. I mean, what would
be in the threes?
Threes?
I mean, like 6-8 months ago. I mean, it was just crazy. The switch that flipped on the market, and now it's just so soft. Yeah. But another great list to pull is people recently recently have purchased VAs with assumable loans. There's a million different ways to kind of go after some sub 2 type stuff.
What market? So you hear 3 or 4 city names and it's like a good short-term rental or good cash flow area. Like what would you say are those top like cities in Denver?
Yeah. I mean, I love Denver proper. Obviously you got to know the suburbs.
Right.
I love that Berkeley house on seller finance. I think that's such a great area. And even to this day, still selling in a couple days just because there's nothing over there.
Yeah.
And it's such a good location. So huge fan of Denver proper. I've got a house in a duplex in Arvada. That Airbnb is doing super well. So huge fan of that kind of around that Old Town area. Other than that, I don't really look too far outside of that. I mean,
you keep it close.
I keep it close. Yeah, we love the Springs for multifamily. Westminster's got great multifamily as well. Pueblo's got some great multifamily. But in terms of short-term markets, I'm not looking outside of that necessarily, and not really looking for more Airbnbs right now unless there's great terms on seller finance.
Gotcha.
It's just so saturated. Everybody and their mother is doing Airbnb. And so there's so much to choose from. And obviously just rates, nightly rates are going down and competition's up. And so I don't see it doing too well over the next couple years. Yeah. I could be wrong on that. Obviously I still have 5 of them that are running,
easy
but
for you to say, right?
I think when you're buying these deals, regardless of financing and regardless of, how you're getting into it and what your exit strategy is, I think it's got to work long-term and short-term. If you're just buying for short-term profit, I think it's a huge guessing game and a huge risk, honestly. It's all the properties that we have work great long-term.
Right.
So worst case, if Airbnb dries up, you're going to long-term tenants.
Right, and you're fine.
You're still cash flowing and you're still building that equity and still ready for your 1031. And so that's, I think, the number one mistake I see for kind of new people getting in is just buying on a pretty speculative cash flow on Airbnb and using AirDNA, but not necessarily looking at the market as a whole and looking at all these other Airbnbs and checking their calendar and doing all that stuff. I think it can lead to some people going down.
Well, you've got quite the calculator too to underwrite those types of.
We do, yeah. We built that out. It's just plug and play, which is perfect for me. I'm not your Excel master here, but underwrites multifamily. It's got all expenses in there. You can build in your private financing if you have private money, and just a quick little snapshot before you waste a bunch of time going down the rabbit hole of seeing if it's worth it or not. So. Quick couple numbers.
Eliminates the errors too,
Yeah, definitely. And it, like I said, I think being conservative on everything that you're underwriting, especially right now, is beyond huge.
Right.
I mean, the rent is so inflated right now; it's just not sustainable. Prices were already kind of unsustainable, and that's coming down, which is good. But I think rents are something to watch right now because they're. I don't know what the stat is. Make something up, but it's up like 20 or 30% year over year, which is not going to continue. I mean, everybody's going to get priced out of.
So even on your long-term rentals, you got to be conservative then too.
Definitely. Yeah, definitely. Make sure it makes sense with that before you go Airbnb. And if you make a shit ton more on Airbnb, it's a cherry on top. But I mean, the goal is to hold long-term. So if you're only planning for one exit and you only have one strategy, I think it's a huge mistake, and something that you and I are super good at is looking at all the exits and seeing what that would look like before we ever dive in or raise money or do anything like that.
Eliminating the downside and
I think so. As much as you can, because it's not a cheap thing to get into.
It could take you out,
and the deal, the opportunity cost can be huge too. If you spend $90K on a deal that is supposed to make you all this money and makes you a couple $100 in a market like this, 3 months from now that $90K could go a lot further, and so. Yeah, underwriting is huge.
Yeah. And that's a good thing with like what we're trying to do with this seller finance is like, we're not trying to make all this money on that Airbnb cash flow.
Right.
We just want to make it so we can own this house for as little as possible.
Yeah, right.
For 10 years down the road. Then that's when we kind of see the end game come into play.
Yeah, definitely. Even that Berkeley deal, it's $1,700 a month.
Right.
To the seller, the long-term rents pretty conservatively are about $3,000, and then Airbnb, $4,000 to $5,000. So even
and you just cash them out in 10 years. That's it.
Yeah, cash them out 10 years, and even long-term, you're maybe $1,200 of cash flow in there. super
and
simple.
you own a property in Berkeley.
Exactly. Yeah. And it's
depreciation, appreciation. I mean,
exactly
all of the above.
Yeah. Get all the good stuff, man.
Yeah.
That's the key.
Well, sweet, man. I think that's about it.
Cool.
Yeah. Do you know, I mean, plug yourself where we get a hold of you. You don't know your new company name, so should we just hold off on that for now?
Yeah, we'll hold off on that for now.
Yeah.
And,
If you guys want to get in touch with Shawn, just call me.
Call Phillip.
I'm
Takes all my calls.
Yeah.
Does all my deals. But I appreciate you having me.
Sweet, bro.
Yeah.